we knew that we could only create the customer experience that people wanted with a brand new policy. It just could not be done by hacking an annual policy and canceling an annual policy. It was just too crazy, too ugly. And we built the core set of forms and suite of forms. And actually, we've gone so far as to really work with departments of insurance collaboratively, because they want this in their state. People that were uninsured become insureds with this program. So this is something that really is good for the mission of the DOIs.
That's Jay Bregman, co-founder of Thimble, and this is the future of insurance. This episode is brought to you by Medallia, the market leader in customer and employee experience. Their award-winning SaaS platform, Medallia Experience Cloud, makes all your other applications customer and employee aware. Medallia uses proprietary AI and machine learning to reveal predictive insights that drive powerful business actions and outcomes. Leading insurers like the Hartford and Farmers use Medallia to reduce churn, turn detractors into promoters, create in-the-moment cross-sell and upsell opportunities, and drive revenue-impacting business decisions. Learn more at Medallia.com. And the Future of Insurance book series, available exclusively from Amazon or at future-of-insurance.com.
Jay Bregman, thank you for joining me. I'm excited to add to getting your story in the book and hearing a little bit more about kind of speaking to the industry itself in addition to the Thimble story, but thank you for making some time.
It's a pleasure. Great to be back. Thank you.
Can you give us just the kind of high level on Thimble? Obviously, I'm going to push people. They should read the book and get more details on your whole story, but what is it? How did you make it? What's the intention here?
Well, Thimble is simple business insurance designed for the uncertainty of starting, operating, and growing a business. So this is insurance that you buy as a small business in a custom time period, anything from a single hour all the way up to a year, or if you want, a month-by-month subscription. And it's that flexibility that helps you confront the challenges of starting a small business and running a small business, particularly in challenging times.
So your background, not insurance, but actually your background is directly touching on kind of that trend that was going on in the economy that a lot of people are into right now, or working, on a gig basis, doing different tasks for different companies, engaging in sort of micro employment, if you will. So it's interesting to me. It's sort of like you were living on the consumer side or serving the consumer side. How did you come to understand this gap in the market, though, from the insurance piece?
Well, so yeah, at Hailo, which was a ride-sharing company, which was my last business, we saw basically the birth of the gig economy, and people doing work in a more transactional way. But what was astounding to me was that if you looked at the insurance industry, it was just a one-size-fits-all market, right? You had to buy a one-year annual policy, you had to qualify for it, you had to pay up front. It just didn't seem to make any sense for the way that businesses were being created nowadays. And so we sought to really figure out how to unbundle the annual policy and create something that was a lot more flexible, that would allow people to buy a custom length of time, anything down to an hour, to a month-to-month true subscription, like a Netflix subscription, and a traditional annual as well, so they could have everything that they needed to start their business and only be paying for insurance on their own terms.
And you started in drones, right? Was
the first
thing.
That's right. Yeah. So we started. We were looking for one particular business vertical to start in, and I happened to be a really avid drone pilot. In 2016, you had a lot of drone pilots who were basically amateurs that were getting FAA licenses and starting to fly for money. But the only thing they didn't have was insurance, because they needed aviation insurance to cover the damage the drone might do if it fell on, one of the reporters or something. We're doing a shoot for a media outlet. And so, there was this gap in the market. It was this new area. And we figured this was a really ideal place to start and really understand if it could be done even from a legal and regulatory and policy point of view. And so we created a brand new type of insurance policy that allowed the pilots to buy between 1 and 8 hours of insurance. We called it episodic insurance. And it was the first of its kind in commercial insurance. We got it approved by regulators in all 50 states and sold tens of thousands of policies or more. And then, a lot of the drone pilots also were not full-time drone pilots, but they were actually photographers, or they were construction workers, or they were real estate brokers that were doing this aerial photography for to help sell houses. And so they basically said, look, this is great for one part of what I do as a company, but could you develop this and expand it into something that covered my entire business? And so that's where we had the idea that we would take this and expand it, and so that it would cover all kinds of different businesses as opposed to just one. And that's where we became Thimble.
And the name, is it like little protection? Is it kind of the thinking with?
It's small protection, taking a kind of, an artifact that has kind of gone out of use, and putting it back into use as a means of, illustrating our commitment to providing the best possible protection for our customers on their own terms.
That's great. I am curious that you mentioned regulation. So I know on the aviation side, it's different from what we might see in the rest of P&C, where maybe heavier regulation and there's more activity in it because it's a bit more mainline or mainstream. Your regulation story or compliance story stood out to me in how purposeful it was and collaborative. And this is something that I'm always interested in, is where, this is one of the things that's held up as like, this is the problem with insurance, or one of the problems is it's regulated. And so you can't insert whatever it is you wish to do. Regulation is going to stand in your way. And you took a very different approach to that, including even when your capacity was like, well, why don't we start with annual, because that's what's in there now, and we'll work backwards and complicate later. You wanted to go about it quite differently. I wonder if you could share some thinking around the regulatory side.
Yeah, look, we knew that we could only create the customer experience that people wanted with a brand new policy, working from the ground up. It just could not be done by hacking an annual policy and canceling an annual policy. It was just too crazy, too ugly, and it was totally unworkable for other reasons. So we knew that we had to do this, and we wanted to go the admitted route because there was really no way to, on a surplus lines basis, to sell in a totally automated, straight through processing kind of way, which is what we needed to do. So so we worked with a number of consultants, some of which now work for us as full-time employees, and we built the core set of forms and suite of forms. And that was version 1, and that's in 48 states, and version 2 is now in 27 states. And actually, we've gone so far as to really work with departments of insurance collaboratively, because they want this in their state. This is something that just helps people get more insurance. People that were uninsured become insureds with this program. So this is something that really is good for the mission of the DOIs. And one example of that is New York actually has a very archaic law that prohibits policies being sold less than a year. Mm-hmm. It was not intended to prevent things like Thimble, but nevertheless, it's kind of there on the books. And so we have been working to change that law And actually, by the time this airs, hopefully, if it airs in a couple of weeks, the bill is with the Assembly now in New York. It's already passed one of the houses, and so we hope it will be passed by then and signed by the governor. And that's the level of commitment that we've gone to, obviously working with the DOIs every step of the way, in order to make sure that that we could get this the greatest experience possible and not have to compromise, even if that meant doing a little bit more legwork to be able to get the customers what we felt they deserved.
Yeah, and a lot of these regulations that people in the industry may bemoan, they're born out of good intentions. So that New York regulation was born in a time when coverage was hard to get. You had to protect the consumers from having it pulled away from them. So it was forcing the 12 months or enforcing the 12 months was there for a very good reason at the time. But that was the 1980s. Things have changed dramatically. The economy is different. The needs are different. And so what was once a protection, a necessary one, now actually it's leaving out, like you mentioned, these drone pilots, and I know that's a different line of coverage, but they couldn't get the coverage that they needed, or were overpaying dramatically, and or raising the cost for the carrier because of all the canceling and rewritings. Then the product's more expensive for everyone, so it ends up being harmful to both consumers and the companies when its initial intention years ago was a positive.
Yes, and look, DOIs, like I said, very collaborative, but they're not going to change the law by themselves, right? That's not what they do. So, sometimes you need to get in there and do a little lobbying and basically, really work to build consensus with legislators and explain to them that this is just a relic and no other state has it. It needs to go. So that's been an interesting process. I mean, I think that's the most we've had to do to get this experience into states. Other states have just been extremely welcoming towards this, and we have a second batch of filings, which is now with all kinds of new coverages in it, et cetera. So, but it's building on everything that we've done before, and the departments are aware of it. They're aware of us. They know the story, and so it's easier the second or third time to be able to do something like this.
But it does say something about embracing it rather than seeing it as one of the other hurdles you have to blast through or work around, or it's a different attitude, I think, than having been in the industry for a while. It's not always what I see people doing is seeing it as like, well, let's embrace it, let's work with them, let's see how it can be a positive.
Yeah, and look, the fact is that it's going to be a defensive barrier for us for some time. The more we do and the more we enhance and the further that we go in this. And so that's why we're really doubling down on our commitment to the DOIs and these admitted filings.
Yeah. Well, look, obviously, when you were building all this, you didn't see the pandemic coming. You didn't see the number of people who were going to lose their, 24/7, or not 24/7, but 5 day a week or whatever regular jobs, and go into business for themselves or do more of these freelance and gig type things because they have to make ends meet or they have to discover something new. So the timing is quite fortuitous that the economy sort of needed you to exist because of the nature of work changing so dramatically. How has that played out, and kind of, as you've navigated a very difficult year, for everybody? It was sort of purpose made for you.
I think what we saw was interesting. We saw bigger businesses cancel their annual policy and buy our month-to-month subscription. And the reason they did it was because they did not want to be stuck with any commitments, and they were just scared that their business would be shut down again. So that was kind of one side of the equation.
And you probably didn't see those insureds being in your core demographic to begin with.
They weren't our core demographic. They were just a little bit bigger than we were used to maybe before, in terms of maybe having one or two employees or anyway. So what else with the pandemic? So we did find that many of our blue collar customers, so these are people that are doing cleaners and janitors, home repair, those sorts of activities. Handymen have experienced massive spikes in their volume.
Yeah.
And so they might have been buying by the job before, but they again chose to adopt this month-to-month subscription policy. And they had a lot more work, at least that was reported to us, than a lot of others. And we were signing up many, many more of those customers. So not everybody did. It depended on what area that you were in. And I think, in the areas that like events and entertainment, things of that nature, it's not that people had to cancel because a lot of people just bought by the event, but they bought less events for a period of time. But now we're starting to see the green shoots of some of these smaller events that are coming back. So it'll be interesting to see, over the next 6 to 12 months, how things recover completely. But net, our business has grown tremendously during this period of time, primarily because if you look at the statistics, 40% year-on-year growth in the number of new businesses created from 2020 to 2019. That is incredible. That has not been seen. That level of growth has not been seen for 30 or 40 years.
Yeah.
And so it's just unprecedented. And of course, a lot of these new businesses are being run by millennials and basically want a 21st century solution. And so they come to find us as their first port of call after they start their business when they need insurance. And so again, this is a huge driver of our growth. And we think it will continue to be for some time.
Yeah, I mean, it's interesting. It's not like the pandemic is the only reason for the growth. The reality is what you're offering is something that mirrors probably 90% of the other things that business is using. Everything else is it's a monthly subscription, or they're thinking in that way. So they're not committing to anything for a year anyway. They're doing all these other things on a monthly basis. So it's like the more the ways that these businesses are being served diverge from the past, the more insurance in the old sense stands out like a sore thumb.
Look, I think
meeting that
people are used to consumerized business services, right? They're not willing to tolerate, oh, this is the way it has always been, and therefore I'm going to deal with it. They will run to the consumerized solution that is like Netflix, or like Hulu, not something that is just archaic and doesn't serve their interests.
Jay, this was a shift in the way insurance is working. How does this play out? Like, what do you think are the coming changes for the industry, or how does this spread? Or, we've talked so much in the past year about the customer experience and all that, and there's been lots of great changes made or catching up. What's the bigger shift that's coming?
Well, I would say that, so I think one of the biggest shifts is really an increase in appetite. So a lot of these tech, insurtech businesses started out doing something very small, renters insurance, whatever it was. And so as a result, they were kind of seen as not a huge threat to the rest of the industry. And even for us, drones, GL insurance for very small businesses doesn't feel, kind of full-fledged. I think what's coming is kind of version 2 of this, which is a business now that has proven it's like ours, that has proven that this works and can now sell much more complicated coverages. So, can now sell, professional liability, can now sell BOP and property, can now sell workers' comp. I mean, those are all coverages that we're working on for this year to put on this platform. And what we find is that's the real trick, right? You get the customers early, and then as they start to grow, or the requirements grow, or they hire a couple employees or whatever, they want to be able to go on an app and have one click and be done with whatever they need to do to get the new kind of insurance they do. They don't want to talk to anybody, and they don't want to to really go through and page by page by page about how to get workers' comp insurance, for example. So I think leveraging our platform for a much bigger audience in terms of businesses that might do up to $10 million in sales, et cetera, is the next phase. And I think that opens this up to a much, much, much bigger market that will be much more, will overlap much more, put it this way, with the small business operations of other insurance companies. But the difference is we have all this great tech and UX that's been refined, and they've got what they had since the beginning, or even nothing. They're selling just through brokers. So I think the market is big enough that there won't be massive turf wars right away. But I certainly think that when some of the insurance entities today start looking at businesses like ours and maybe others, they start to really think hard about how this is going to play out and how big these companies could be, and what the impact on their legacy platforms will be. And I don't believe, based on what I've seen, that these companies will be effective in the time that they have in recreating or attempting to recreate these services. So we can foresee partnerships as one of the potential outcomes of that. I mean, in 2020, we did a major partnership with Hiscox, and they explained very transparently that they knew that this was a service that people wanted. They knew they couldn't do it for at least 2-3 years, whatever it is. And so, they thought maybe a better opportunity was to partner, put us on their website, and develop an operation and get commission, et cetera. So, I think there's definitely some opportunity for those type of interactions. And I also think on the underwriting side, who's in terms of who's supporting capacity. I mean, we have great partners that are working with us, but there's always more to do as you grow, and as you grow your appetite, and as you grow the class list, and all of the things that basically the lines of business that tend to over time outstrip what any one entity is comfortable of doing. So also that is, I think, an opportunity for the more legacy carriers to get involved in companies like ours. Yeah.
Do you? One of the things that stands out to me is the 3-question underwriting, which when we were talking about the drone coverage, that you were quick to point out is sometimes not even 3, because we have GPS on the phone, so we may not even need to ask where they are. We can just verify that they are flying where their phone thinks they are. Is that another barrier then? Because there's a lot of discussion about how we trim the question set we have now and how hard it is to trim that set. But they're starting from 180 questions or whatever it is. Is there something in the mentality, the freedom of not being from the industry, that allows you to do that?
Yeah, look, so I think there is. Remember, we have a totally custom platform, so it includes custom pricing, everything else. We charge more. We are unabashed of it. So we charge more for convenience. We charge more for the lack of commitment. Our customers are willing to make that trade. Nobody in the traditional insurance market does any of those things, so they're not really willing to do this to make that change or that trade. They're usually sold through brokers or other intermediaries, and it's a race to the bottom, et cetera, et cetera, et cetera. So we really do, I think, have a different approach to this. Also, it doesn't just have to be 3 questions at the same time, meaning somebody can answer 3 questions to get the GL policy, and then if they need workers' comp, we can ask additional questions at that time if we need to, or we can take things that we know about them that we've learned from their life. So the customer gets the feeling like it's never too much, right? Yeah. It's always less than the competition, and it's always easily explained and straightforward.
So it goes back to that UX or CX mentality that you have built that you keep extending as you get into other things.
Yeah, absolutely. And I think it's the CX mentality, and it's the fact that we're not afraid to charge a reasonable price for the lack of underwriting questions, and just the general setup of the system in terms of trading convenience, for maybe a slightly higher price.
Is that sustainable then? So if 5 years from now, all those we can do this, but not for a few more years, kind of traditional players come into the market, does that then change your ability to charge a premium for the simplicity, for the flexibility? Or are there things that you feel that you guys have set a mode up that still you will always be more value or higher value and a better experience?
Yeah, look, I mean, anything's possible, but if you look at a lot of these markets that should invite massive competition, it doesn't always work out that way. Or there's clearly one winner. Media being one area that you see this. So it could happen that somebody could dedicate to try and catch up. It would be a Herculean task, I think, for any legacy insurance company, primarily because they'd be fighting against themselves and their own underwriters in order to try and get, we know how hard it is to fight for these things, but we have data now. Imagine having no data and trying to fight with your underwriters against things that have never done before. It's just a tough, time-consuming process, and who in these organizations is powerful enough, like an entrepreneur outside, running their own company, to be able to do those things. So look, maybe it will happen. We're happy to have competition, but by that time, I think we'll be significantly large that partnership may be a better outcome.
Yeah. Well, I think the clean slate obviously gives you an advantage starting ahead, but then also recognizing you could have just said, no one will ever do it, but you recognize, yeah, it's possible. And that continues to lead you to push to do more, to create a better experience, add products, et cetera. So that I always say the lack of hubris is really important on both sides, legacy and startup, right? So we need to recognize maybe it's another startup, like we don't get to exist without competition forever. But I will say, maybe it's because you lived creating businesses in that space where the economy was moving to, with Hailo and eCourier before that. You definitely had an understanding and maybe impressions for what was coming from the consumption side or the need side. And it's a very interesting solution that I'm still not seeing met by other players in the market. So I applaud you guys for that. It seems obvious now, right? And you start to liken it. You keep saying Netflix, like, yeah, why wouldn't it work like that? Netflix isn't cheap, right? And they're raising their prices again.
Exactly.
People pay it because there's a convenience, there's a flexibility, there's all these, and a great experience that comes with it. It just goes to show that the market is asking for these kinds of solutions and getting trained on it more and more through everything we consume on a daily basis.
Yeah, absolutely.
Jay, thank you for spending some time adding to the time you've already given me in building the case in the book, which is honestly really interesting.
It was very it's very well written, so I encourage everybody to go and get it.
Thank you very much. But it's cool hearing the whole story behind it and where you got to today. Thank you for the time and for joining me again.
Oh, thanks, Todd. It was a pleasure.
Huge thank you to Jay and to the whole Thimble team, not just for this interview, but bigger picture. They've been really supportive of the work that I'm doing and gave me a lot of their time and insights to obviously put this interview together, but A lot more went into telling the Thimble story in the latest version of my book. The latest volume of my book, where Thimble is one of the case studies. They're fantastic. It's a really interesting story of something that is different, like genuinely innovating on the product, the delivery of it, and rethinking what we could be doing to stand by our customers as their not just needs or wishes change, the customer experience wishes, which is true, but the nature of their business and therefore the nature of their exposure and their need for coverage is evolving right before our eyes. So really cool story kind of in the crucible or in the lab of transforming the, how we think about what a policy could be. This 12-month term it's always been. So definitely hope you enjoyed the interview, but pick up the book to go even deeper if this sparked some interest for you in the Thimble story. And you can get The Future of Insurance from Disruption to Evolution, Volume 2, The Startups, at Amazon or at future-of-insurance. And of course, it's in every kind of format you could want: audio, digital with an ebook on Kindle, and paperback and hardcover. And you can even get a signed copy if that's what you want. So check out more at future-of-insurance.com, and of course more from Thimble at thimble.com. A big thank you also to Medallia for making this interview and this series possible, for sponsoring the podcast. And a reminder, if you haven't subscribed to the show yet, subscribe, whether that's on YouTube or Apple Podcasts or Spotify or wherever. Subscribe and tell a friend. No doubt you have someone else in the industry who's thinking about it, who maybe has thoughts about how it could be different. Hopefully the conversations in this show can help spark some thoughts for them. So share it with a friend. All right, I'll leave it there. Thank you. And I hope that you come back for the next episode. It's the joys of subscribing. You don't even have to think about it. It just pops into your inbox. So have a great day and keep pushing the industry forward. Thank you.